China, she says, AI should not be a solo performance by a single country. The leverage shift starts now. Here is the signal that separates noise from actionable change. We will map trigger, incentive shift, and downstream impact before the close. He said AI should not be a solo performance by a single country. That's not diplomatic language. That's a direct challenge to U.S. technological dominance, and it signals China's readiness to reshape global AI governance on its terms. Here's what just happened. China's leader stood up in front of the international community and essentially said, the era of one nation controlling AI infrastructure, standards, and deployment is over. He didn't name America. He didn't need to. Every tech executive, every regulator, and every venture capital firm in San Francisco understood the message immediately. Why does this matter right now? Because AI deployment is accelerating faster than regulation can move. Right now, American companies, OpenAI, Google, Meta, control the largest language models and set de facto global standards through their products. Developers everywhere build on top of U.S. infrastructure. That creates dependency. Xi's statement is a signal that China will no longer accept that arrangement, and it suggests a coordinated push to create alternative AI ecosystems, alternative standards bodies, and alternative compute pathways that don't rely on U.S. technology. The second implication is the one nobody's talking about yet. This is about chip supply chains and compute access. If China successfully fragments the global AI market, creating separate Chinese-led AI systems, standards, and infrastructure parallel to Western systems, it changes everything about semiconductor exports, cloud computing regulation, and data governance. Companies will face a choice: build for the U.S. ecosystem or the Chinese ecosystem. That choice cascades. It affects which chips sell where, which cloud providers survive, and which countries can participate in what markets. But here's where it gets interesting. Xi's framing, not a solo performance, is actually smart geopolitics. It sounds multilateral. It sounds fair. It appeals to smaller nations that feel locked out of AI infrastructure, developing economies that can't afford to build their own models, and countries frustrated with U.S. platform dominance in social media, search, and cloud computing. If China can position itself as the champion of shared AI, where developing nations get access to models, compute, and data governance frameworks without U.S. mediation, that's a powerful counter-narrative. India, Southeast Asia, parts of Africa, and Latin America might see Chinese-backed AI infrastructure as liberation from Silicon Valley lock-in. Now the contrarian angle. This statement could also be positioning for negotiation. China might be signaling openness to multilateral AI governance, actual dialogue with the US, EU, and other major players on standards, safety, and fairness. That would be a very different outcome. If the statement leads to international AI governance talks where China, the US, and the EU actually align on baseline safety standards, compute transparency, and data ethics, that could stabilize the market and reduce fragmentation risk. That's the optimistic read. But the most likely scenario sits in the middle. China will push for alternative standards and infrastructure while maintaining the appearance of openness to dialogue. It's already doing this through the Shanghai Cooperation Organization, Belt and Road Partnerships, and regional tech forums. AI is just the next frontier. What changes next is, expect Chinese tech companies to aggressively export AI models, inference APIs, and foundation models to developing nations at lower cost than US alternatives. Expect China to push for multilateral AI governance bodies where developing nations have voting power. Expect semiconductor export controls to tighten further on both sides. And expect US tech companies to start localizing more infrastructure in allied nations too. Avoid getting cut off from non-Western markets. For Indian markets and tech workers specifically, this is significant. India has become a major hub for AI training, data labeling, and back-end compute services. If the global AI market fragments into US-aligned and China-aligned ecosystems, India's tech workforce could become even more valuable to both sides as a neutral ground for AI development and deployment. But it also means Indian companies and startups need to choose: build on top of US infrastructure, Chinese infrastructure, or create genuinely independent Indian AI capabilities. The companies that can do all three, operate in multiple ecosystems without lock-in, will have enormous leverage. For investors, this is a shift to monitor closely. AI startup valuations have been driven by the assumption of a unified global market. If that market splits, valuations for companies without geographic diversification could face pressure. But companies building AI infrastructure for emerging markets, or tools that work across multiple regional ecosystems, suddenly look more defensible. Watch for funding announcements in the next 2 weeks that signal which VCs are betting on fragmented AI markets versus unified ones. That will tell you where smart capital thinks this is headed. The absolute bottom line: she just declared that the age of American AI monopoly is ending, and China is positioning itself to lead the alternative. Whether that leads to genuine competition and better outcomes for emerging economies, or just a new form of lock-in under Chinese infrastructure, is the question worth watching. This is worth paying close attention to. Xi Jinping just said AI should not be a solo performance by a single country. That's a direct shot at US tech dominance and a signal that China is building an alternative AI ecosystem where developing nations don't need Silicon Valley. Here's what changes: expect Chinese AI models flooding into India, Southeast Asia, and Africa at lower costs. Expect US tech companies to localize more infrastructure in allied nations. And expect the global AI market to fragment into separate US-aligned and China-aligned systems. For Indian tech workers and companies, this is opportunity. You're now a battlefield for AI development. Watch the next 2 weeks for which VCs fund emerging market AI infrastructure. That shows you where the real money thinks this is headed. Focus on 3 layers: immediate trigger, structural incentive shift, and downstream effects on operators, users, and regulators. Then map scenario playbooks: optimistic execution, base case adaptation, and risk case where integration friction or policy reaction slows adoption.